CNBC TV18, celebrating 16 years of business leadership.
लोकतंत्र में संसद से बड़ी कौन सी जगह होती है जहां पर वाद विवाद संवाद विरोध सब हो सकता है।
कांग्रेस पार्टी एक ऐसे विषय पर सदन को रोक रही है जिसका न सदन से मतलब है न सरकार से मतलब
तो कांग्रेस पार्टी और विरोध पार्टियों के खिलाफ एक मुहिम उन्होंने चला रखी है या वेंडेटा का पॉलिटिक्स हो रहा है।
11 days gone, 9 more to go. Can the government break the parliament deadlock? Good evening. Thanks very much for joining us on India Business Hour. Kritika joins us from Mumbai. Here's a look at the headlines that we're tracking for you this Thursday evening.
So in a federal system, we must have some consensus about the issues like this.
जहाँ तक जीएसटी का प्रश्न है, जनता दल जीएसटी के पक्ष में।
Crucial week for the GST negotiations. The government hopes to end the impasse. The Congress nominates ANAND to lead the negotiations. Congress Chief Minister of Kerala, Oomen, Chandy, says the GST is good for his state.
Market snapped the 6-day losing streak. Nifty gains nearly 1% and SENSEX jumps over 200 points. Midcaps also bounce back.
The Reserve Bank of India is all set to crack down on banks misusing the strategic debt restructuring tool. Sources say rules could be tightened soon. That's another exclusive.
Really no synergy between the amount of money that is being given to the consumer and the alleged problem that is being cited.
The call drop battle moves to the Delhi High Court. Telecom companies challenge the jurisdiction of the regulator to impose the 1 rupee penalty for call drops starting 2016.
The government plans to unveil a new startup policy in January, plans to provide tax exemptions and easier exit options. That's another exclusive tonight.
CBI questions UB Group Chairman Vijay Mallya. Mallya and IDBI officials are under the lens in a 900 crore rupee loan default case.
8 years after acquiring the company, Havells sells its 80% stake in Europe Sylvania, set to garner over 1,000 crore rupees. The stock rallies in trade.
Infosys set for industry-leading growth rates by FY17, says CEO Vishal Sikka. Also plays down the impact of the Chennai floods on the company's business. That stock also rallied in trade.
The Bombay High Court acquits Salman Khan in the 2002 hit-and-run case, overturns the trial court verdict for the lack of conclusive evidence.
David Headley pleads guilty for his involvement in the 26/11 attacks in front of a Mumbai court via video conferencing from the United States. Court tenders a pardon after he agrees to turn an approver.
All of that and more coming up for you in just a bit, but on to the market action. Finally, some green on the screen. The 6-day losing streak ended on the last street, but this is only thanks to a short covering bounce. Let's bring up the Nifty for you, ending about 1% higher, 7,683. It's edging closer back to 7,700. The SENSEX today gained about 200 points, and the bulls finally got some respite, so 25,052. That's where the SENSEX ended, higher by about 216 points. Will this sustain or not is the big question. But on to Mint Street, where the rupee gained 12 paise and closed at 66.71 to the dollar. This thanks to fresh dollar selling by banks and exporters. However, the rupee is likely to remain under pressure as the markets brace themselves for that possible Fed rate hike, which looks like it is coming this month itself. In fact, the RBI today introduced cross-currency options to help efficient hedging. There's now 3 new contracts like the euro dollar, the pound dollar and the yen dollar that were introduced. So far, trades were only allowed to hedge using contracts that had the rupee as one of the pair. This decision was announced by the central bank in its September monetary policy. But what about commodities, Kritika?
Jane, after a volatile run, finally oil prices have stabilized today as a direct consequence of the fall that was seen in US crude inventories. And OPEC report says that the supply of oil from countries outside of the OPEC will contract next year due to a rise that was seen in demand. But this is not doing anything to enthuse investors. So both Brent and NYMEX are trading lower as we speak. Brent below that $40 per barrel mark. NYMEX just clinging on to that $37 per barrel mark. Meanwhile, gold is trading flat today, but is vulnerable to further downside as the dollar index is gaining strength as we speak. But Shireen, the big story this evening is the GST. 11 days gone.
Well, that has been the big story.
11 days.
11 days running now with Parliament gridlocked. The fate of the GST continues to be shrouded in uncertainty. Now, sources in the government say that they've done what they could. They've communicated their position to the Congress party. Let's take you through where things stand. Of the 3 crucial demands that the Congress party has made, the centre has told the Congress that it is ready now to remove the 1% interstate tax. That was the big controversial tax. Remember, this was also a recommendation of the Arvind Subramanian panel. Now, the Subramanian panel has also pegged the GST rate below 18%. In fact, it's pegged the rate at between 15 to 15.5%. The Congress had wanted 18% or lower, and that's exactly what the panel has recommended. So that's 2 in favour of the Congress camp. But the centre, we understand, is not ready to make any concessions on inclusion of the rate as part of the Constitution. Instead, it says it will make it part of the GST bill. The Congress in the past has said that that issue is non-negotiable. So can we expect any sort of a breakthrough or a last-minute miracle? That's the question. Now, sources have told us that negotiations have entered a crucial phase. In fact, the next 2 days are particularly critical. From the Congress party has nominated ANAND, the former Commerce Minister, as well as senior Congress leader, to lead the charge as the centre hopes that perhaps there will be a breakthrough. But one thing is absolutely clear. Senior government sources telling CNBC TV 18 that they're not in the mood to be blackmailed on account of the National Herald case. And if the GST needs to be the casualty, if the bill does not go through in this session of Parliament, that's fine. But there is only so much that the government is willing to cede ground on. Meanwhile, even Congress chief ministers are hoping that the GST bill will be passed. Kerala's Oomen Chandy told me that the tax reform will benefit his state. In fact, Bihar's Nitish Kumar, as we've been telling you, he is crucial as well to the GST negotiations. In fact, the BJP has been leaning on Nitish Kumar to lean on the Congress to try and ensure the passage of the bill. He believes that the bill should go through as well. But both do say that the Congress has every right to be upset over the Herald case. Listen in.
GST is beneficial to some states, but for other states it is adversely affecting. So there is a conflict of interest.
But it will be beneficial to you because your service is oriented.
For Kerala, it is beneficial. At the same time, it is not beneficial to Tamil Nadu, Maharashtra, such states. So in a federal system, we must have some consensus about the issues like this. So the Congress party wants that consensus through the discussion in the Parliament and outside the Parliament. So Congress is not objecting or opposing
the GST.
to pass the GST. At the same time, as a national party, Congress has to take care of the interest of all the states.
जहाँ तक जीएसटी का प्रश्न है, जनता दल यू जीएसटी के पक्ष में, और आज से नहीं है। जब यूपीए की सरकार थी और उन्होंने ये प्रस्ताव रखा था, उस समय से ही हम लोग इसके पक्षधर हैं और पक्ष लेने के कई कारण हैं। उसके जो फायदे हैं वो कई हैं, सिर्फ इसलिए नहीं कि हम एक कंज्यूमर स्टेट है और हमको इसका लाभ मिल सकता है, सिर्फ इसलिए नहीं।
There are, I would say, issues related to particular individuals, particular parties that are bringing down the entire democratic system. The people of India are waiting for action. the people of India want a better life. And if those solutions, those needs have to be delivered to them, then we have to have our democratic system functioning. We have to have parliament that functions so that we can do the people's business. If the people's business is continuously blocked, then I think it's a very sad day for our democracy.
BJP is now saying that it's a Congress which is now starting in the process of having a final.
Has wisdom dawned upon them after opposing it for 5 years? The parliament session is not convened just to pass one bill. An opposition government engagement, we have repeatedly maintained, has to be constructive, has to cover all issues, cannot be restricted to the passage or otherwise of one bill. That's a separate issue. GST should not be linked to the ongoing impasse. We have raised certain issues, our concerns which have been flagged. The government had said they will deliberate, they will come back to us. They will come back to us formally, then the Congress party will deliberate.
So both sides look like they're digging their heels in. The government is saying it's not willing to be blackmailed over the National Herald issue, and the Congress is saying exactly the same. So the fate of the GST is still in balance. While battling for a low rate of the GST, the Arvind Subramanian panel has cautioned the centre to devise a fair and transparent compensation formula for states. So if there is a revenue shortage, states will still retain the right to levy additional taxes on petroleum products and alcohol, even if these are included in the GST chain, which they currently are not. Sapna Das reports that the panel has also suggested a higher exemption limit of 40 lakhs for the GST against what's been proposed currently. Let's take a look at the details, the fine print of the Subramanian panel.
The GST panel headed by Arvind Subramaniam has given food for thought to the government on its ambitious tax reform. Stressing on the need to reassure states, the panel has pushed for clear rules on compensation to avoid glitches and controversy in rolling out GST. The panel has also cautioned that the compensation formula will have to factor in falling inflation, as that will impact nominal GDP and hence the revenue outlook for both centre and states. As a way out of a possible revenue shortfall, the panel says, apart from raising the GST rates itself, states will continue to have the power to levy additional tax on alcohol and petroleum, even if they're brought in the GST ambit, while both central and states may tax tobacco at higher rates. And finally, as a last resort, the centre could even afford to relax its deficit target based on the fact that it was actually an investment for implementing unprecedentedly ambitious tax reform with enormous long-run gains. Moreover, a moderately higher deficit due to a low GST will benefit consumers, especially the poorer ones.
While GST compensation funds may be required only practically towards the end of the first year of implementation of GST, the Chief Economic Advisor has red flagged the possible impact of falling inflation on the fiscal roadmap. He has also red flagged the need to keep the GST compensation rules clear and simple so that there is no trust deficit between the centre and the states. The panel also goes on to suggest that the 2% rate ban included in the Constitution Amendment Bill may have to be revisited, as this could prove to be distortionary, defeating the purpose of a unified market.
The report says if states exercise the rate ban, there will be varying rates for a product and will not lead to any meaningful additional fiscal autonomy for states. Plus, rate bans would also create complications for administering CVD or countervailing duties, thus making domestic manufacturing more expensive in comparison to imports. The CA panel has also pushed for keeping the GST exemption threshold at 40 lakhs annually against the current proposal of keeping it at 25 lakhs. The panel says this will minimize the burden on small taxpayers, but state finance ministers are divided on these issues in the last few years, with some states suggesting to keep the exemption threshold unchanged at 10 lakhs to protect their tax base, while others are agreeable to raising it to a maximum of 15 lakhs. In New Delhi, Sapna Das.
Well, the question remains if a last-minute miracle is possible or not. But moving on, the PSU Bank Index was under pressure today. This after CNBC TV18 reported the story that the Reserve Bank of India may come down hard on banks that are trying to misuse the powerful strategic debt restructuring or SDR tool. We learned from sources that RBI is looking to tighten the SDR guidelines, and that too soon. Ritu Singh has exclusive details on that development. Ritu, has there been evidence of banks misusing the tool, and if so, what action will the RBI now take to prevent this?
In the last few months, some of India's largest banks have invoked SDR in as many as 9 cases amounting to almost 57,000 crores worth of loans, but not one has been able to use the tool effectively to tackle the problem of putting the project back on track. Sure, it may be early days to judge, but sources say that the RBI is already keeping a very close tab on all of these SDR cases to ensure that there is no misuse by banks of this powerful tool. Now, where could the misuse be? Well, sources say there may be cases where SDR has been invoked without a clear evidence of managerial inefficiency, just so that the asset can be kept as a standard account and higher provisioning can be avoided. Remember, under SDR, banks are allowed to keep the loan as standard for 18 months till they can find a new promoter. So we are given to understand that the RBI is worried that there could be cases, especially in the steel companies, where SDR has been misused by some of the banks. And in order to avoid this, RBI may soon tweak the SDI norms in such a way that the banks that have not made genuine efforts to get the projects back on track will have to retrospectively make provisions. So for the entire 18-month period where they were allowed to keep the asset as standard, banks will have to make the same amount of provisions for the SDR account as they would have been required to do for a non-performing asset. So the message from the RBI is really very clear. Stressed assets has to be recognized and banks will not be allowed to just kick the can.
All right, don't misuse the SDR route. That's the message from the Reserve Bank Governor. Ritu, thanks very much. And staying with the Reserve Bank Governor, he has raised the red flag once again on the rising levels of debt in the system. Raghuram Rajan has warned that high levels of debt, like dynamite, that could explode any time, but could also be beneficial if used correctly. So he's highlighted both the use as well as the misuse. Take a look.
Debt is very much like dynamite. It's an instrument which is very useful in the right places, explosive in others. There is always a temptation to overuse it because it's so easy to use, and sometimes very warped incentives to use it. However, despite these difficulties associated with debt, banning debt is typically not an option. The right answer typically is, can we get moderation? And for a regulator like me, can I regulate moderation?
Well, speaking of debt being like dynamite, here's one such case of an explosion. The chairman of the UB Group, Vijay Mallya, has been questioned by the CBI in connection with the alleged loan defaults of the now defunct Kingfisher Airlines. Prerna Barua joins in now with details. Prerna, why was this FIR originally filed?
Well, Vijay Mallya was interrogated at the CBI headquarters in New Delhi today in connection with an alleged loan default by the now defunct Kingfisher Airlines. We understand that Vijay Mallya will be questioned again by the investigative agency. Now, if you recall, CBI had registered a case in October against Vijay Mallya, Kingfisher Airlines, along with the then CFO of the airline and also a few officials of the IDBI Bank. In the FIR, CBI had alleged that IDBI officials colluded with the promoters and directors of Kingfisher Airlines and sanctioned credit limits of about 900 crore rupees in violation of banking norms. If you recall, CBI had also conducted searches in the residence and office premises of Vijay Mallya and Kingfisher Airlines across the country in about 5 locations. Now, CBI officials claim that investigations are currently on and that they have found some incriminating evidences that have been found during the searches that were conducted. Back to you.
All right, thanks very much, Prerna. In fact, this was a question that was answered by the Minister in Parliament, not the question on the CBI probe into Vijay Mallya, but a question on how much Kingfisher Airlines and other airlines owe the Airports Authority of India. Now, telecom companies have taken the battle against call drop penalty to the Delhi High Court. This was expected. We were just waiting for when this would have happened. It's happened today. 2 industry bodies, that's the COAI, the Cellular Operators Association of India, as well as OFPI, are challenging the authority of the telecom regulator, that's the TRAI, to impose a penalty on call drops, which was supposed to come into effect as per the TRAI order from January of 2016. Now, the regulator has proposed a 1 rupee penalty for every call drop and a maximum of 3 rupees every day. The industry calls this order grossly unjust and claims that it could lead to losses as high as 54,000 crore rupees. But the telecom regulator will have none of it. In fact, speaking to CBC TV 18 in that interview to me, he said a few days ago that telecom companies are exaggerating the losses by assuming that 50% of consumers will actually try and game the system, which he says is an insult to consumers. He also very categorically stated that his order will stand unless it was held to be null and void by a court of law, and that's exactly what the Delhi High Court will now have to take a call on.
TRAI turns around and then says you have to then provide relief in terms of almost a penalty to the consumer. We believe it's gone beyond its brief, and also that there's really no synergy between the amount of money that is being given to the consumer and the alleged problem that is being cited as an excess.
All right, sir. So, and also I remember in the letter you all did cite that, as per the licensing, agreements, the telcos are not mandated to provide any compensation to its customers. So is this also one of your prayers in the petition?
So there are rules and regulations for consumers to seek redress in the appropriate forums. Okay. There's the consumer forum, there's the anti-competition forums, and any and all of those are available.
Right.
The 1885 Act, under which we are licensed, the Telegraph Act, indicates that since it is a sovereign right, the individual subscribers have to not come as individuals but as an aggregation. And so again, that is tangential, but the main issue is one of saying is that the amount of penalty versus the alleged problem doesn't bear any correlation.
Right.
Our order says that we will compensate only those calls which get dropped in the originating network.
Okay.
So if I am calling from Airtel to Vodafone and the call drops at the Vodafone leg, the person will not get a compensation. Or they are talking about 54,000 crores. So they are assuming that 50% of the people of this country, because there are 1 billion, mobile connections. So 500 million people of this country will run to cause call drops, right?
So you believe they're creating an alarm?
No, this is an insult to the customers.
Well, it could be an insult to the customers. But in fact, a few days ago, the telecom minister too had heat out at telecom operators. He said that he did not want to be called as the call drop minister. It was a no-holds-barred speech from the telecom minister, Ravi Shankar Prasad, at an open house organized by the regulator, CHAI, in fact, lambasting the telecom operators over call drops. The minister urged them to work harder and come good on the various proposals to ramp up investments and spruce up their networks.
I regret to say, very frankly, it took a lot of nudging on my side to all of you getting publicly acknowledged that there is a need for improvement. Initial alibi was the spectrum is less. There's a need to improve the network, and I compliment you that you are coming with investment proposals. I'm sorry, I don't want to be known as call drop minister. Sorry. I'm being very clear about it. And I will drive it very, very categorically because the country is concerned about it.
Post that line, he is going to be known as the call drop minister, even though he doesn't want to. But now the new year could see a new dawn for startups in India. The government is all set to unveil a policy to provide easing ways to raise funds and provide some tax exemptions too. Purnima joins us now with the exclusive details. So a new startup policy in the new year, Purnima.
Well, the Department of Industrial Policy and Promotion is framing a national startup policy and is holding several rounds of discussions with the industry bodies like NASSCOM and iSpirit. We understand that the government will unveil the national startup policy by January next year. We also understand that there will be two categories of startups. Category A will include any new company and Category B will include innovation-based startups. Sources tell us that startups which come under Category A may well get early stage tax exemptions and that the Finance Ministry is looking into this right now. And for startups that come under the second category, the centre is working on providing more tax clarity. The focus right now for the centre is to make norms easier for winding up startups and also to relax the external commercial borrowing norms, which will allow easy access of funds for the startups. So right now the DIPP is working with the RBI, the Ministry of Corporate Affairs and the Finance Ministry to draft the startup policy that will be rolled out come January. Back to you.
All right, Purnima, thanks very much. In fact, as you mentioned, we spoke with the DIPP Secretary Amitabh Kant, and he told CNBC TV 18's Anshu Sharma that the government is determined to make life easier for startups. Listen in.
The government is determined to provide a huge impetus to startup and spread it beyond Tier 1 cities to Tier 2, Tier 3 cities, take it beyond the digital world into manufacturing and agriculture and social sectors. We've had a lot of interaction, and I think that process is on, and we are working on this. But definitely, the government is very determined to do things for startups.
Well, back to corporate action, and here's one of the stocks that was shining in trade today. Lighting and electrical product maker Havells has sold 80% stake in European company Sylvania. Havells had acquired that company in 2007. That stock shot up in trade as analysts expect the stock to be upgraded eventually. The company has managed to garner nearly 149 million euros by selling an 80% stake. Varinder Bansal is here with the details. Varinder, take us through the deal contours and how will this improve the company's balance sheet in the long term?
So thank you so much. Clearly the stock of the day, when after Havells announced that they have entered into an agreement to sell Sylvania for an equity value of nearly 1,000 crores. The deal will be structured in two phases. In the first part, the company will be selling nearly 80% stake for nearly 1,000 crores. 20% remaining will be capitalized by the company in the next 3 to 5 years. This is what the management also mentioned. Now, what does it mean for the company? Clearly, if you just see the investment, the total investment done by Havells in Sylvania till now stands around 1,000 crores. There's a debt of nearly 170 crores on the company, on Sylvania. There will be no write-off on the equity invested. So the company will clearly gain on the investment what they have done. So there's no loss which is coming after the company sold its business to a Chinese company. Now, clearly, what does it mean if you have to look at Havells after Sylvania? Well, the cash on books of the company is around 700 crores. They'll get 1,000 crores after the Sylvania stake sale, though, so the cash will be around 1,700 crores. It means that is around 10% of the current market cap. Well, post Sylvania, the standalone business will be trading around 24-25 times FY17 earnings. People are expecting that there will be some upgrades which will be coming in, which we will have a close eye. But a report coming from Macquarie where they say that they are expecting re-rating on Havells clearly, and that could happen, that the valuation parameters for Havells could now get re-rated in line with even Asian Paints, because if you look at the ROE, return on equity of Havells, it's much better than the Paints company. So they were very bullish on Havells. The stock was in fact up nearly 8%. This is a big overhang, which has clearly went off the company in a profitable manner. So no, complaints about it.
Havells' balance sheet would get strengthened with cash available. Already Havells didn't have any debt on the balance sheet. With this divestment, there will be more cash available, which will open up more and more opportunities. The standalone business continues to be on a strong footing, and there will be no change of guidance from that point of view.
All right, so divesting 80% in Sylvania, the deal being struck in China. That's Havells for you. Infosys is on track to achieve industry-leading growth by FY17. That's the word in from the company's MD and CEO Vishal Sikka. Addressing an analyst meet, the Infosys management struck an optimistic note on growth despite concerns of increasing protectionism in the US. Kritika Saxena has more.
The December quarter may be lackluster, but FY17 is looking promising. That's the message from Infosys. Striking a confident note in an analyst conference call organized by Barclays, the company says it is on track to achieve industry-leading growth in the next fiscal, a vision outlined by Infosys founder N.R. Narayana Murthy in 2013.
We expect to get to industry-leading growth as we have said, when Mr. Murthy came back, we talked about a 3-year time frame for that, and we are on track to get there. In fixed-price projects, generally there is a cost pressure that you see, and certainly in the infrastructure-oriented ones. But in the fixed-price projects, there is also a tremendous opportunity to bring automation in.
The company is keeping an eye on 5 parameters to keep the growth pace. These include focusing on large deal wins, improving account mining, lowering attrition, improving operational efficiency, and increasing revenue growth per employee. The management admits that while the company is on track to achieving the first 4, it will probably take a few years to grow the revenue generated per employee, which currently stands at $50,000.
Per capita revenue improvement by definition will take time. We have always said that, look, we have to be in 25% plus or minus. That's the medium-term goal. We want to be there, and we have levers. There could be quarterly, variations, but by and large, that is the trajectory that we are looking at, 25 plus or minus.
While Infosys sounds optimistic about FY17, the immediate October-December quarter is likely to remain muted due to seasonal furloughs. However, while the company hopes to make up for that sluggishness in the fourth quarter of FY16 to meet its slated full-year guidance of 10 to 12% constant currency growth. The management also says the Chennai floods have not had any major impact on the third quarter performance. In Mumbai, Kritika Saxena.
CNBC TV 18, celebrating 16 years of business leadership.